Good evening and a warm welcome to my yet another session on basic accounting. In continuation with the series of illustration sums under trading account, profit and loss account and balance sheet. In this video, today we are going to discuss an illustration sum under final accounts. Now this is a problem under final accounts. From the following balances of Mrs. Pavan sales on 31/3/2012, prepare a trading and profit and loss account and a balance sheet as on that date. The informations are given on both the sides. Now we will discuss one after the other all the items. Drawings, capital, these two items will appear on the liability side. Capital less drawings is the treatment to be given. Sundry creditors is a current liability that will appear on the liability side of the balance sheet. Sundry debtors is a current asset that will appear on the asset side of the balance sheet. Bills receivable is also a current asset that will appear on the asset side. Opening stock, this will appear on the debit side of the trading account. The first item is opening stock in the trading account. Now furniture and fittings are fixed assets that will appear on the asset side of the balance sheet. Cash in hand is a current asset. Machinery is a fixed asset. Bank overdraft is a long-term liability. Purchases will appear on the debit side of the trading account. Sales will also appear on the credit side of the trading account. Purchases less returns. So here there are two returns given, returns inwards and returns outwards. Purchases less returns outwards. Returns outwards means the items that we have purchased from a supplier is now not suitable for us. So due to some defect, we are returning that back to the supplier. That is why we say returning outward. So that returns outward is nothing but purchase returns. Same way, when we say returns inwards, the materials that we have supplied to our customer, we have sold to our customer is being returned by our customer because that is not suitable for them or maybe some defects are there. So they are returning back. Now that is returned inward. That is called a sales return. So returns outwards is purchase return. Returns inwards is sales returns. Purchases less returns outwards will appear on the debit side. Sales less returns inwards will appear on the credit side of the trading account. Now office salaries will appear on the debit side of the profit and loss account. Manufacturing wages, since that is related to manufacturing of the product in the plant, that will appear on the debit side of the trading account. Now commission, trade expenses, rent, all these three are expenses that will appear on the debit side of the profit and loss account. Discount received is an income that will appear on the credit side of the profit and loss account, and bills payable is a liability that will appear in the liability side of the balance sheet. Now let us see how these entries are being entered in the trading and profit and loss account. So next the solution is in the form of trading and profit and loss account. Yes, here the first item is opening stock, then purchases less returns outwards. 2200 is returns outwards, that is being taken on the debit side. Now manufacturing wages is also on the debit side. Now sales less returns and closing stock are on the credit side. When we add the total on both the sides, the credit side is having the highest total 3 lakh. Now that is been taken to the debit side. Now the difference that makes 1,64,200, the difference is the gross profit, which is to be transferred to the profit and loss account. So we are carrying forward that gross profit to the profit and loss account credit side. Now except one item, discount received, all other items are appearing on the debit side of the profit and loss account, namely office expenses, commission, trade expenses, rent. All these are appearing on the debit side of the profit and loss account. These are expenses. And on the credit side, discount received is something earned by the company, so that is on the credit side. Now the total on both the sides is 1,70 to 200. Now the difference on the debit side is the net profit, which makes 1,35,800. Now this net profit is to be transferred to the balance sheet on the liability side. This is adjusted with the capital. Capital, add net profit, less drawings. Now we'll go to the balance sheet and see how the items, assets and liabilities are being entered there in the balance sheet. Now the solution for the balance sheet is like this. Bills payable, sundry creditors, bank overdraft, all these are liabilities, and capital less drawings, add net profit. So that's a treatment to be given for the net profit and drawings. Net profit is to be added with the capital, drawings are to be deducted from the capital. Now we have a total of 1,75,800 if the adjustments are done. And cash in hand, bills receivable, sundry debtors, stock, furniture and fittings are appearing on the asset side. Out of which cash in hand, bills receivable and sundry debtors, closing stock are current assets. Furniture and fixed is a fixed asset. Furniture and fittings is a fixed asset. Now the total on both sides is 2,79,800. So the condition for the balance sheet is that the total of both assets and liabilities should match or equal, and it is getting tallied. So we assume that all the entries are correct in the trading account and profit and loss account and balance sheet. So we have come to the end of the session. Thank you for watching. This is a full-fledged problem which is called as a final accounts involving trading account, profit and loss account and balance sheet. Thank you for watching once again.